The process for the liquidation of Amigo loans and its subsidiaries is a winding-down procedure designed to maximize the return to creditors, primarily those owed compensation for missold loans under a court-approved scheme of arrangement. Background of the process. The liquidation follows Amigo's inability to raise the necessary funds to fully implement the original terms of its scheme of arrangement, which was designed to pay redress to customers with valid complaints against the company. This failure triggered a wind-down of the business instead of a planned restart of lending operations. Key stages of the liquidation. Cessation of lending and wind-down. Amigo ceased offering new loans and began an orderly, solvent wind-down of its existing business. The company's remaining loan book continues to be collected, with all net proceeds designated for the compensation scheme. Scheme of arrangement implementation. The core of the process involves the scheme of arrangement, which is the mechanism for assessing and paying out claims to eligible creditors, known as redress creditors, primarily former borrowers and guarantors. Claim assessment. An appointed supervisor manages the process of assessing all lodged compensation claims against Amigo. Redress calculation. For upheld claims, a redress amount is calculated, typically including a refund of interest and fees paid, plus statutory interest. Pro rata payout. Due to the company's financial position, the scheme provides for a pro rata payment to creditors. The estimated payout percentage has been around 17 pence for every pound of an upheld claim. Payments are made in tranches as funds are collected from the loan book runoff. Formal appointment of liquidators. Practitioners from a firm like Grant Thornton are appointed as liquidators for Amigo's operating subsidiaries, such as Amigo Loans Limited. The liquidators oversee the final steps of the solvent liquidation. Completion and cash shell status. Upon the liquidator's appointment and the wind-down of operations, the Amigo operating companies cease activity. Amigo Holdings, the parent company, becomes a cash shell, with no operating business or further liability under the scheme, as all surplus assets will have been paid out or set aside for running costs. Delisting and final insolvency. Parent company. The ultimate parent company, Amigo Holdings, is expected to eventually enter a member's voluntary liquidation and be delisted from the London Stock Exchange, as there will be no value remaining for its shareholders after the subsidiary's assets are distributed to creditors. The final resolution of all scheme claims and payments marks the formal end of the process, which has been projected to take around a year from the final decision to liquidate.